Hello there. You're welcome to today's lesson. Did you know that the kind of business organization you established could mean that in times of bankruptcy or liquidation, you'd have to settle business liabilities with your personal assets? Did you know that the form of business organization you established could determine when you file your returns and as to whether some expenses will be allowed for tax purposes? At the end of this module, the objectives are to help you, our business owners, identify the forms of business organization from which you could choose. And this will help you achieve the maximum shareholder worth or value you've always desired for, and would lead to the survival of your business in this time of uncertainties and competition. Our discussions shall cover subjects like what the business organization is, the forms of business organization and their characteristics, financing options available to each form of business organization that you choose. The next form of business organization a business owner can choose from is the partnership. Two or more people coming together to undertake a business venture with the aim of making profit forms a partnership. The members of a partnership are referred to as partners. The partners could be in two forms: the dormant or the active partners. A dormant or a sleeping partner, as called sometimes, contributes capital in exchange for shares, but is not directly involved in the day-to-day running of the business. The active partner is involved directly in the day-to-day running of the business. There are benefits when you choose a partnership as a form of business. One, specialized knowledge from each partner enriches decision making. The burden of capital contribution is shared among partners, and this determines the profit and loss sharing ratio among the partners. The devastating effect of bearing liabilities is taken off. What it means is this: partners will share in each other's losses as compared with the sole proprietor. There are some benefits when you choose partnership as a form of business organization. One, specialized knowledge from each partner enriches decision making. Two, the burden of capital contribution is shared among partners, and this determines the profit and loss share ratio of the partnership. Finally, the devastating effect of bearing liabilities is taken off. Unlike sole proprietorship, who bears all the losses alone. There are some downsides too when you choose partnership. One, there is a possible human relation issue that might come up in the running of the business, and this could even affect the survival of the business. Delays in decision making as compared with the sole proprietorship. And finally, like the sole proprietorship, liabilities are still unlimited. That means it could extend to the personal assets of the partners. There are some financing options when you choose partnership. One, the capital contribution from partners. Loans from lenders. And finally, retained profits from the venture. What is the legal and economic implication of choosing partnership? Once again, no separate legal entity means the liability of the partnership are borne by the partners. What it means is, in case of bankruptcy, the individual assets of the partners will be used to defray the liability of the partnership. Economically, it appears to be more preferred than a sole proprietor. Can you imagine when a lawyer teams up with a doctor and they come to you for business venture? You solely prefer them as compared to the sole proprietor. I want to know, which form of business organization have you registered so far? Could you share your experience with us? See you.